Are you running the meeting remotely? Would you like your vice president to run the meeting for you?
Am I what? I'm getting a little echo, Rick.
Are you running the meeting remotely, or would you like your vice president to run this meeting for you?
Vice president, definitely.
We'll call to order. All those present here. Here. Except
Here.
remotely. Carl. Roll call, motion to approve the minutes. Did you guys read the minutes? They're in the last page of that attachment.
In the reminder, there's two because you guys moved the May ones to.
Carl, can you hear us okay? You good?
I wasn't here.
Yeah, it sounds great, actually.
Great.
I wasn't here. I was in May.
All right.
I think they were just waiting because you hadn't read them and there was only two other people to vote on them.
I'll make a motion to approve May. Were you here in May?
I think May. Or remember works.
Yep, you were there.
Yep. So I'll move on May.
Okay, so I moved, you say, you second, so we're gonna approve May. We have a motion to approve June.
I need an amendment.
Okay, what is that?
Under Woody Creek project, it says all approved, which is right. But on the board of director comments and actions, the fifth motion by Carl to accept Stryker Brown, I voted against that. So it wasn't all approved.
Okay.
Yeah,
I
voted
against everything.
I was raising hell about it. I would never vote for a contract like that. And then secondly, the other one down there, the Aspen Housing Assistance Program, I voted against that.
Sorry, my bad.
Which one?
I'll change it.
We'll second to the last bullet point.
So who was originally doing a motion for these minutes?
No
I'll
way.
make a motion to approve them
You and Wobbs, okay, second.
as amended.
I'll second.
All approved? Make sure.
With the amendments? All in
With the
favor?
amendment, yeah.
Yes.
Correct, with those two adjustments.
Okay. Public comment? No public comment? Good of the district? I didn't come to the 4th of July party, but was it great?
Nikki, why don't you film on the 4th of July party? You were.
It was good, it was busy. It was a AVFD Inc. event along Mountain Rescue. And actually we had a lot more people. We had a little hiccup towards the end of the night because it took the band about an hour and a half to switch between the two of them. So people thought we were done. So we lost a group of people right then and there, but got some more people back when the second band started. So that was good. We're just figuring out the financials to see where we ended up with it. We had a lot of great participation and help from both organizations.
Also, last Friday, we helped host the Picken County, what do you call them? Picken area co-training. Anyway, with mental health stuff, there was a lot of people here for that. We didn't pay for it. We just supplied the space and some manpower to help out with it. It was a project. I don't know if you all heard about it last time we were here, but the governor of the state gave our county a bunch of money, county and city law enforcement, to have mental health technicians, clinicians right along with cops, Aspen Police, Picken County, and Snowmass, to like calls of like suicide, domestic abuse, other stuff, that trying to get people out of jails, keep them out of the system. So there was a big kickoff party here. It was actually well attended, and I thought it went really well. I had a good band here for that too. Good day.
Would they participate in any if we had a critical stress debriefing?
They wouldn't do that. No, that's not what they're doing. I have a meeting tomorrow with some folks about that, though. I've been in part of, I think you guys may remember, I spoke at the Youth Festival about first responder mental health, And I went to Denver for a legislative session, a roundtable. So I've been asked to help participate and sit on some of those meetings. If anyone wants to say those. We did, few of us, several people went to yesterday. There was a volunteer firefighter in Gibson who committed suicide last week. Also a deputy. We sent some people over there, Roy and Bradshaw and one other person, Roy's nephew, who was a firefighter, went yesterday to represent Aspen Fire in that unfortunate service.
Let's give it to Paul so we can get out of here. Paul, come back.
You're up, Paul.
All right, well, thank you. I think most of you know me, Paul Bacchus, CPA, Avon, and I'm with McMahan Associates. And we audit pretty much all the fire districts in the area and pretty much all the governments in the area. I'll give you a quick overview of kind of what we do. So we first get all the information. We actually, Jan is kind enough to upload all your QuickBooks database to our software. We actually restore it, and that way we can kind of get right in your system and look at all the transactions as we need be, and that kind of makes things go a little smoother. We run a fair number of reports off of there and pull them all in, and then we set about verifying it. So like as an example, Call a Trust, here's all your Call a Trust accounts, and so if your financial statement says you have 900,000 in the general fund or $1,068,000 in the debt service fund, we're actually going to get the statement, scan that in, verify the reconciliation, send a confirm to Call a Trust that says, yes, those statements are correct, and the money's in the bank, follows your investment policy, follows state statute, insured by FDIC, all those type of items. We'll do the same thing with your receivables. If you have property taxes outstanding, we're going to make sure that you've collected all the amounts. We actually get how much you milled and then compare that with what you collected. Recalculate the treasurer's fees, things like that, trying to make sure any money that is owed to the district actually gets collected. And you can see each one of these is a work paper on that particular area, and then this is actually Mike, and that's my review. Do the same thing with all your capital assets. So we want to make sure that any new assets get added to your list, depreciated, included on your insurance listings, and depreciated appropriately. We'll go through, you can see on here, we had, you'll see on the financials, we had a gain on sale of asset relating to the sale of that lot in conjunction this year. So we scan all that in. Go through all the payables. When the district makes a payment, it should be related to district business, budgeted for, approved by the board, paid timely, no interest, late fees, and coded to the correct account. So we go through and do all that. Payroll, we want to make sure that you have the correct, there's a whole bunch of pension requirements that we have to follow through with FPPA. It's pretty esoteric, so I won't bore you guys with that. We go through all your debt. So when you issued bonds to build this station or anything else, there was a whole lot of promises that the district undertook on reserve funds, reporting, those type of things. So we'll go through all that, make sure that you've complied with that. We'll go through your equity. You can see we calculate the Tabor reserve, make sure that you have the correct Tabor reserve, make sure you started 2018 with where you ended 2017. Go through all your revenues and expenses. We send Carl a nice letter and says, tell us if the district's being sued and there's a liability there that we don't know about. He sends something back. We go through all the state statutes. And the goal of all this, and you can see that we scanned in 206 different work papers to kind of help verify your financial statements, is we put together the financial statements. And actually the financial statements are yours. The opinion is ours. So you should have had in your packet the independent auditor's report. This is called an unmodified opinion. A lot of people refer to it as a clean opinion. And then there's a management discussion and analysis, which is section B. That's actually from Jan, but we actually do assist quite a bit on preparing that. And that's just a description of kind of what happened during the year, but I'm going to jump right into the financials. And so I'm going to jump to page C2. And
excuse me, Paul.
Sure.
You guys got these about 2 months ago when it was ready. Do you need a copy now to look at while he's going through? I only have a couple, and I need one back.
What page you on, Paul?
I'm on C2. So your financial statements look a little different than maybe other governments because you have one primary purpose, fire protection. So if you can try to compare your financials to maybe like City of Aspen or an entity that has multiple purposes, they look quite a bit different. We choose the simplified approach for you. So believe it or not, this is as simple as we can kind of make it. But you have your three funds, right? We have general fund, debt service, and capital acquisition funds. And these first four columns are, think of them like cash basis. Money comes in, it's revenue. Money goes out, it's an expense. And they're in the categories that you guys have your QuickBooks organized and how you budget. And so you'll see the revenue coming into the general fund was $2.5 million, primarily property taxes. We had another $1.2 million of revenue that came into the debt service fund, $184,000 that came into capital acquisition. So we had $4 million that came in as revenue that was deposited in the bank. Then expenditures go out, and you'll see each fund has the amount that they spent. And then we had sale of assets on there down below, $42,300. That was the lot that I was referring to. And we get to the third line from the bottom where it says change in fund balance or net position. Effectively, the general fund added $125,000 to your fund balance last year. So we started with $839,000. You ended with $965,000. So that's the first thing I would bring you today is what happened to our general fund. We added $125,000.
That's our net
income. Right. That's how much your cash balance is ultimately.
So we didn't send it all to FPPA.
We're going to send it to capital acquisitions, but historically, we've sent either the 90, but this year's strange in that we've got the sale of that land. So this year, I'd suggest we send the change in fund balance, the 125,449, into capital acquisition. It still leaves us,
As a savings
we'd have a
account.
fund balance of still $839,000 in general fund. So I'll make a motion to that sometime here soon.
What's that put the general acquisitions balance sheet? Is there a balance sheet for that?
Yeah, if you flip back a page,
Okay.
you'll see the balance sheet for the three funds. So you have, the same number at the bottom, 965,000 in total fund balance, and then 725 in the capital acquisition fund. So if you move that, you'll add however much you decide to move.
Yep, in that same fund, starting in January with our tax revenue, we've got $600,000 allocated to go into that fund in calendar year 19.
In capital acquisitions.
Into capital acquisition.
Paul, I have one question, one comment for you. We're going to be changing the way we pay, or way we pay for communications this year. We're going to be paying quarterly instead of once yearly. Does that need to be changed somewhere for bookkeeping, Jay?
No, all good, it's better.
No, it's, one of the
Like now, this year.
things that we wait for is that ultimately that bill, because we do push it back in the year that the service was.
We won't need to do that anymore. Now we're paying quarterly, and then the last bill, that'll be the end of the year. We'll be done. We won't have to do that anymore. And then whatever difference is, will be made up in the first quarter of next year. So it's plus or minus. If it's more or less, it'll be made up in the first quarter.
Yeah.
So after this, we can do that.
So that will be nice.
We get voted on in January.
Yeah.
Yeah, it's something.
Truthfully, that we would prefer that too.
Something we talked about in the last meeting, and
So, you added 125 to the general fund, 156 debt service, and 37 to capital acquisition. So 319,000. Then you have this adjustment column, and really that's going from kind of the cash basis or the modified accrual basis to a longer term view, which would be full accrual. So I'll try not to nerd out on you guys, but really what it's doing is keeping this right-hand column is keeping the books as if you were a business. So as an example, we have to add to firefighting depreciation on all your assets. So that's not a cash transaction. We have the changes in the net pension liability. So that's kind of this item here. We spent 132,000 in assets, so we have to capitalize that asset and report it, the expense off as depreciation over the life. Yes, you used 815,000 of cash paying down principal on your debt, but we have less debt, so we account for that transaction. So if you were looking at kind of what happened on a cash basis, we added 200. Let me scroll down a little more. We added 319,000 to our balances. If you were keeping your books on a full accrual basis, you would have had net income of 742,000. So what that really just tells me is you're not making short-term decisions that cause long-term problems. Where I tend to see that is, as an example, you issued debt to build this building. It has a 40-year life. You initially had 25-year debt on it, I think, maybe 30-year, I don't remember, 20-year debt. So if after the first 10 years you did a refunding and you extended the life out further, and you did that again, which sometimes we see, suddenly you have 50-year debt on a 40-year building, that's where you see that stuff show up. It's too bad that we actually have to analyze it that way, but you do see a lot of entities doing stuff like that.
Like we find my house.
It is, exactly, yeah. You never get it paid off. Then you have notes to the financial statements and some budget actuals. A lot of the notes has to do with FPPA and the pension liabilities, which we get their numbers and include them. The information, you can see there is a disclosure on page D27 of your mill levy change. So we're just letting the user, because you got to keep in mind these financial statements are not just for you. It's going to go to the SEC, all the bondholders, any granting agencies will also get a copy. So we inform them, hey, we had a successful mill levy change, so that's in there.
Will it does affect our ratings anywhere with the levy change? We're already AAA.
You're already AAA, so I don't see where it's really going to have a big impact, but at least on your bond ratings.
Oh, you're AA.
Well, it depends on who, I think, rating agency. It depends on whether you're looking at Moody's or S&P. I'd have to go look, but I think Moody's had you as AAA. S&P maybe had you as AA, but
Might affect that.
yeah. And then the rest of it is kind of pension information and budget actual statements, but really the financial statements, I think, look pretty much what you would have anticipated in your budget process. Any questions on the financial statements? Then I do have a letter that I can go through also.
Who, and this just comes up because of what we read in the newspaper about basalt lately, but
well, we were just hired this year by basalt, so
who protects us against that?
Well, I have to be a little careful what I'm saying. All I can tell you is we did not audit basalt prior to this, and
We talk about their integrity issue.
yeah, and that's something that we check every year for you guys. I don't know why that wasn't analyzed before, and I'm really not going to even try to guess. I can only tell you.
Did you guys uncover it? I don't remember how it came about. You don't want to admit to that?
No, I have their meeting in a couple weeks. You're welcome to.
Okay.
You're welcome to attend. I don't want to talk about different client
I have one question.
at this meeting, but I can tell you that we actually go on and you can see we had your property tax calculations in there. We look. That's one of the things we check is, you can't float your mill levy up and down without a vote. Did you have multiple fiscal year obligations? Anytime you sign a lease or something, we make sure you have the language in there that says it's annually appropriable. And so there's a fair number of things that we actually go through to try and make sure that you guys are complying with the law.
How often, you bring that up, the lease thing, how often does a municipality that signs a lease at some point, maybe it was a 5-year lease, but you have your boilerplate in there, your language that says it's annually appropriatable. How often do they not appropriate those funds? This is just a big general question. It's not to us or anything else.
Well,
You're talking about COPs or something?
Yeah.
the biggest issue I haven't seen it on a lease. I have, on a normal lease. Where I have seen it is on COPs.
Yeah.
I don't know if you remember, but Cinderella City built a nice new town hall. They had a big mall. The mall closed, and they said, well, we're not going to pay our lease payments, but we're still going to try and occupy the building that we built with it. And it went all the way to the Supreme Court. And the Supreme Court said, no, you don't have to make the payment, but you got to vacate the building, because that was what was tied as security to the debt. So that's a long story. If you choose not to pay, you lose use of the asset, but you could.
Okay.
It would impact your bond rating.
Well, you may not be able to answer this, or you may not want to answer this, but I have a question that we're going to have to contemplate by next year's budget time. When we went to the voters for the levy increase, there was a lot of question from one of the newspapers or one of the newspapers, I remember, asking where we were planning on using this money. All this money we were allocating $3.3 million. I sent them, we sent them a full breakdown of where we're using every bit of that money. We're anticipating using that money. Some was for capital replacement, some was for the building, et cetera. But one of the items in there was broken down for money to make up the Gallagher, because we anticipated, thanks to the Gallagher amendment, the Gallagher amendment was going to put the RAR at 6.11. It's not going to go to 6.11 now. I think it's going to go to 6.9 or something, is what they're anticipating. So there's going to be a gap. There's going to be a delta for us of, I don't know the number, called $100,000 or whatever that number is, that we don't have a shortfall, whatever that number was, it's like 100,000 less. Well, should we or would we be obligated to take that money in next year's budget?
No, we audit to the ballot question as it's approved. So to the extent that, that's ultimately what the electorate voted on, and that's what you'll be held to account for.
So legally, we have an obligation, but fiscally, that's something we'll have to have a discussion with the board. We know exactly what that number is.
Yeah, that's kind of your decision as a board, how you want to handle that.
I think we had something like, I don't have it in front of me, $225,000 or something. So offset, we had 1.25, and for housing, we had 600,000 a year for capital replacement. I think we had 700,000 a year for additional staffing. That's a number the newspaper has. So I want to make sure when they call me, hey, Tabor or Gallagher didn't go to this, what are you doing with money? Because I committed to them, even on the housing, if we didn't spend it all, we wouldn't take it all or give it part of it back. So we need to be very clear. I suspect they'll call us out on that.
Yeah, and I think that's obviously you promise something to the electorate. You want to do everything you can to comply with it. But from our standpoint, we are going to look through this and say, are you following the ballot question? Because that's legally what was approved.
The rest is up to us. Okay.
Yeah. And, maybe some of the voters saw it in the newspaper, maybe they didn't, but every voter saw this question. So that's ultimately what we have to audit towards.
Okay.
And, I can tell you that, we have kind of all these questions in here on Tabor that we go through and kind of verify that won't happen to you.
Are we debruced, and does that make any difference?
I believe you are debruced. Let's take a look.
Are we?
Yeah.
Yeah. So how does that affect us?
That's it. He's talking about a different thing.
So Tabor has two, oops.
Although it looks like there's gonna be a state question in November trying to get rid of it, gather up the thing altogether. And leave it
You
up-
mean the percentage?
Yeah, they're trying to leave it up to, I think, municipalities. I don't know exactly what. There's supposed to be something in the ballot in November about that. I think so.
So if you look right here, you'll see this is a disclosure in your footnotes on Tabor. So on November 2nd, 1999, and we kind of handle, I've learned over time, because we do so many governments, we probably over disclose some of this stuff, but it helps whoever comes along on your audit next, whether it's our staff or Jan or whoever. So this was what the actual question that was passed. And this is debruced, as it's commonly referred to. But that is a little different than the salts question, because there's actually two limitations in Tabor. One is a property tax limit. Another is an overall revenue limit. So you are exempt from the overall revenue limit, so is basalt, but you're not exempt from the property tax limitation. So I don't know if that makes sense or answers your question, but
That's Gallagher.
We can't tax a larger mill levy than.
you can't just adjust your mill levy without a vote.
Right.
Yeah. Well, you can reduce it.
Okay.
And if you do choose to reduce it, my job is to make sure the financial statements are correct, and I defer to Carl on this, but there is a method to reduce your mill levy where you can increase it back, called a temporary mill levy credit.
We've done that before.
If you use that, then you can increase it again. If you just flat out assess a lower amount, then you can't ever increase it again without a vote. So if that is a road you go down, I would encourage you to at least consider the temporary mill levy credit.
So right now, we're banking a lot of that money that we went to the voters for we've got budgeted quite a bit of money for LoSAP, for instance. So far, we haven't used any of it. We've also got budgeted, I'm not sure how we're keeping track of this, some additional funding for some additional staffing at table in January. So that money's, where's that money?
Go to the savings account, right? Should be able to do a savings account, right? Call a trust?
Is it being earmarked what that amounts?
No, it comes back.
All right, okay. All right.
So if you want to earmark those dollars, though, at the end of the year, what I would recommend you do is pass a resolution saying we are going to designate this much of our fund balance for whatever you choose. So if you look, this is page C1, and on here, C1, and on here is this is a balance sheet, right? So we have assets, liabilities, and then your equity. And on the bottom, equity is divided into a couple different categories. So the first component of equity is what's not spendable. And generally what's not spendable is things like, for you guys, is prepaid expenses, because that's already been spent, inventory, maybe some restricted cash. Then you have the restricted bucket, which in your case is the 3% Tabor. So you have to set aside 3% per the statute. Yeah, so we'll recalculate that and make sure that you comply. And you can't restrict stuff as a board because a restriction has to be an outside restriction, but you can designate or assign money. really doesn't.
A bucket of funds or
Yeah, a
something.
bucket of funds. As a board, you can say it's our intention to use these funds as X amount. So you can see you have 819,000 of unassigned. The effect of that would be if you said, hey, we're going to designate 100,000 for LoSAP, then we would add another line here and it would say assigned $100,000 and this 819 would become 719.
So,
And then we would disclose that.
That's a very important point, Paul. I don't remember the number, but I think it's something like 150,000 or what the number is that we dedicated out of the budget for LoSAP. I don't know, it could be 100,000, the number is. Right now, we've got something like, I'm guessing, but 2/3 of our firefighters with almost zero. We don't no longer give out PPA. So a lot of our firefighters right now have really no retirement plan. That's something I really need to bring back to you guys to get that fixed. We have it right now. It's $1,000 a year or something like that. So that's something that we've got money for it. We just got to figure out how we're going to disperse it.
So in order to make sure that we're properly picking that up, you guys would pass a formal resolution in a board meeting. Jan would take that resolution and she would create, you maybe already have an account, assigned fund balance. If you don't, we'll create one. And then you'd reduce the unassigned and increase the assigned for the amount that you guys want to set aside. And you could do that for however many items you feel is appropriate.
So shouldn't that be part of our budget every year?
It's good, right?
The expense, like what we talked about, 2,500 is the top end, right down to you had or somebody had ultimate authority on what that was going to be.
We did, and that was based on, we've been running in the background for the last year or so, LoSAP point system. And I think it's just something we've got to come to grips with and figure out how we disperse that money, because a lot of our guys, somebody can tell me a number, a lot of our guys, probably not this guy, but there's really no retirement system in place adequate for all of it.
Well, we absolutely need that.
Yeah.
Fund that, but also, how's that money then invested?
The difference is, well, here's the difference.
Where's it
go? LoSAP program is different. The LoSAP system is, there's no, after the first year, it's not like FPPA where you have to be here 10 years. It's your money. This guy's new guys, after the first year, they start getting this money every year into their account. It's their money. They're only here 3 years, they leave with whatever that is in their account. They manage their account, we don't. More or less.
457. It goes into a 457 retirement account.
Okay. But that's something that we were kind of waiting for a lot of the other stuff we've been working on. So I'm ready now to jump back into that with the right program, whether it's a point system or whatever it's going to be. And we've been running that. We should run some analysis on what that point.
So whatever you decide as a board, you just have to make sure Jan knows that. She'll book that, and then we'll verify it back against the resolution.
Can we create a separate bank account for some of this stuff too?
You don't have to separate the cash, just a separate account in QuickBooks.
Question then, I guess that'd be up to us, you guys, not us. We look at that starting to January 1st, and even though we haven't implemented the program, can we retro that to the 1st?
Yeah, it's at your end,
Yeah,
so
it doesn't look like this.
whatever you feel like.
I'll work on that for you guys.
We all done? I got one question. If we have housing in ASHPA, which is Aspen County Housing Authority,
This guy right here, Aperture.
Says that a 2-bedroom unit, should rent for $1,200. And we have a unit like that. And we choose to rent it to a volunteer for $700. Is the $500 taxable to the volunteer?
My job is to make sure the financial statements are correct. It's not to play IRS guy. But with that said, it likely is unless there are some specific requirements. So I would love it if my firm would just make my house payment instead of me making it and not include that as taxable income. The IRS tends to frown on that. So you start winding down the road of what is a taxable benefit, and generally a taxable benefit, to not be taxable, it has to be things like it has to be on site at the premises or close enough to make a difference. It has to be part of a contract or an obligation of employment. However, they tend to be looser for police and fire.
Which you think we would qualify for, right? We want to lease it to first responders. They need to be a volunteer firefighter.
Well,
You're right behind the fire station at North 40.
Yeah.
so that's what I'm asking, if they're required to be, certain qualifications.
Yeah, and I honestly, I'd have to look that up or research it off the top of my head. I don't know. I know what it is for vehicles.
I can give you part of the answer on that. It's the 2 units we have right now, they have specific requirements they have to maintain, station keeper duties, all that kind of stuff. One of the reasons that I looked at doing dedicated staffing, which some people poo-poo, was because that was a specific requirement and kept them out of the, in my opinion at least, from the opinion I got from the tax side of it, having to tax them as income, because they were doing something for that money other than just living for half price. So that's one requirement that was helping with this dedicated staffing. It's like Starwood and even North 40. So, but just being a volunteer, would that work?
I'd have to research it. I have no idea.
Because theoretically, the volunteers are under fair labor. I'm going to say this, I'm not sure. They're employed just like I'm an employee of the district. Is that right?
You're not employed.
Well,
You guys aren't an employee, they are an employee.
okay, they're not. They're employed or not. Well,
Paid.
yeah. But,
Actually, if city council, for an example, they get a W-2, they are an employee, so to the extent that you would be paid as a board member.
yeah, I get a W-2 from Sanders.
Yeah.
So that's a good question. These guys don't take, they elected a few years ago not to take a monthly stipend. If they took, because since I've been here, I haven't seen this. If they took their, now it's up to $100 a meeting, right? If they took for $100 a meeting for coming to these meetings, it's up to.
You get a W-2. You get a W-2.
$24 a year, they get W-2 for that.
Yeah, I get a W-2 at the Sanders.
Yeah, sometimes people think it's 1099, but it's W-2.
Then I'm wrong.
But just like Sanders, they have employees living down there, and they give them a 20% discount to what Ashland would normally charge for that. And that's for them living and being on call.
Yeah, and my recollection is the IRS hasn't really spent a lot of time looking at discount housing and affordable housing programs. But I would have to research it.
Well, that's fine. So we're not on real thin ice.
Well, we're gonna be, when North 40's done, we're gonna have as many as 2 dozen units. So it's gonna be changed, we're gonna have close to 2 dozen units when North 40's done.
I can't hear you.
We're gonna have close to 2 dozen units when North 40's done all in all. So it's gonna kind of change the dynamic quite a bit.
Yeah, and I don't worry a whole lot about police and fire because they understandably have written the IRS code to recognize that you're frequently on call, you need access to first responders. So generally it's softer on kind of first responders than, providing your accountant with housing. Any other questions on that? Okay, there is a letter I'll just kind of briefly run through. We're required to disclose to you certain items. Are there any accounting policies that are different this year than last? No. You may recall the last time you probably had something there was when we had to include the pension change in there. What are the biggest estimates? Really, the biggest estimate for you guys is the pension liability that we get from FPPA. We take the numbers and crunch them, but that's all done by actuaries if the actuaries are right, your calculation's right. If they're not, then your financial statements could change. Difficulties encountered performing the and most fire district audits are pretty straightforward, but we really appreciate the kind of how you guys work with our software and stuff. As far as uploading, that really helps us, the whole QuickBooks backup file. Corrected and uncorrected misstatements. This is really what journal entries did we make. So we made some journal entries to capitalize assets, record depreciation, adjust the compensated absences as vacation for paid employees, and adjust some deferred refunding and bond costs, and then the journal entries for the net pension assets or liabilities. So those are, 5 kind of categories, but those are all pretty much what we do for every district. So there isn't anything there that I think you as a board would have concerns with. When I would have concerns over the entries that we make, it's if you're adjusting cash, right? Those bank recs have to be correct. If you're adjusting receivables, what we're billing has to be correct, and payables, what we're paying has to be correct. These are more kind of the numbers that we have to adjust for bond analysts and things like that. Disagreements with management, didn't have any. We do have a I didn't lie, cheat, or steal letter from your staff. And just one item, there is a new accounting standard coming out, and it does deal with leases. As long as your leases are less than a year, like as an example for affordable housing, it's not an issue. But
less than a year?
A year or less.
Okay.
So let's not, to keep your lives simpler, let's not sign multiple year leases.
All over 1 year.
Okay. Anything that's longer than that has to be recorded as an asset or a liability on your financial statements and amortized appropriately. So, where that becomes kind of a nightmare is, counties and cities that have a lot of leases, because it's whether you're the leasee or the lessor, it's going to go on as an asset or liability. So entities that have a lot of leases, it's going to kind of be a pain. I don't think it's going to be a big issue.
Picken County lease, year to year?
Picken County year, no, that's a 10 years.
So that, we'll record that one, but that's one lease. I mean, that's not a big deal.
All the other housing.
Yeah.
I do have a question on the lease, though. Have you heard about this yet? I've worked with a nonprofit who wants to potentially kill us if there was a good creek. It's going to be funded and looks like they're doing pretty good fundraising. It's going to be first floor is going to be a meeting room, which they will use, their nonprofit will use for meetings, caucus, whatever, another maybe art show, whatever they do. I don't know. And we'd use it if we needed it for training or meeting or a command center if there's an incident over that way. Upstairs will be a 2-bedroom apartment. The building will belong to us. They're going to pay for it. We do like a $1 a year lease with these guys for usage. Would that suffice?
Yeah, I mean, there's a lot of different ways. Carl will have to figure out whether is it a lease, is it an easement, what is it? If it's $1 a year, it really isn't going to matter to us. But when you have those substantial leases where you're actually paying, a legitimate lease rate by the leasee or the lessor, that gets recorded as basically a receivable or a liability on your balance sheet, and then amortized off over time. Is kind of the change.
Well, where does that new rule about the pension liability show up?
You mean disclosure of it?
No, on the statements.
So it is right here on page C1. Net pension liability, 1.4 million. And then you have to keep in mind there's a lag effect. So if you look, you'll see you have these if you look up top, you have this pension-related deferred outflow and pension-related deferred inflow. And how it works, it gets kind of complicated, but the reason you have those items is because the actuaries say, this is what we think your liability is. And then when your actual experience is different, say your pool dies early or lives longer, or your FPPA's investment earn more or less than what the actuaries expect, they don't want those changes to be recorded all at once. So as an example, if the stock market had a big year, FPPA closes their liability, they don't want these big swings running through everyone's financial statements. So what they do is they kind of divide these differences between what they think is going to happen and what actually happens, and they report that as a deferral, and then they kind of amortize it based upon mostly 5 years. It's a little more complicated than that, but so anyways, that's these two items. Eventually, this is going to reduce the 1.4 million over the next 5 years, this 500,000, and this is going to increase the liability of 1.4 million over the next 3 years. So that liability is probably closer to $1 million than 1.4 if you were going to kind of push all the changes through in 1 year. I don't know if that made sense, but
Yeah.
they don't want your net income going up or down based upon how the stock market return is for a year because of the liability. You guys have it easy. FPPA is great. If you actually looked at PARA, the Colorado Public Employee, I mean, those numbers dwarf anything on school districts' financial statements. So, you have 23 million in total assets and a liability, net pension liability of 1.4 million. The para entities have, 50 million of assets and they'll have $100 million liability just because of kind of what's been promised versus what they have. So just be glad you have FPPA.
How do you ever balance that? I mean, that's our point. We want to balance that number and not have that liability.
When are we gonna get it soon?
2017, we got the actuarial at the end of June. I asked them yesterday when we can expect this one. They said late July, early August.
For unfunded
Well,
balance.
we put how much extra in last year? 400. We're putting a lot more in.
Yeah, you guys have control over that. That's what gets hard with para stuff is they really don't have any control over it.
We can make a difference.
Yeah.
Right?
Yeah.
A couple $100,000 here and there.
Yeah.
Thank you, sir.
Thank you. If you guys have any questions or need anything, let us know. Otherwise, we're going to start filing. Well, normally there's a motion to accept the audit, and then we will go through and make sure it's filed with everybody that
I'll move.
needs it.
I'll second.
Okay, so motion by John, 1 second to accept audit.
We probably will, if we didn't.
Audit as presented, is that?
Carl still on the phone?
Who's seconded?
Carl, you still there? Hey, Carl, you still there?
Yeah, I'm still here.
Okay, you can.
Who's second that one?
Are you in the boat?
Dennis? Does everyone
vote.
approve?
No, I said, are you on the boat? Oh no, do you want to vote? Oh, there we go.
Yes, aye.
Put down the Mai Tai.
All approved. Okay.
Put down the Mai Tai, John said.
I'll make a motion that we,
I'm not drinking tonight, it's boring.
I'll make a motion that we move 125,449 from general fund to capital acquisition.
So you'll record that as a transfer, right?
I'll second that.
Remind me, was that the that money the extra from last year? That's budget, what budget? Is that 129? That was going to get spent from last year's budget.
That income.
No.
So you're basically
From last year, yeah.
Part of that is, part of that's the sale of that land.
125, 449.
125, 449.
Yep, 125,449. From general fund to capital acquisition.
Did I get it?
Dennis, second. You want to take a vote? Carl, you good with that?
Yes, thank you, Nikki.
Okay.
Did I get my commission on the sale of that lot?
Once again, we're not gonna have a bid.
All right.
Once again, we're not gonna have
Beer. I think,
Usually he buys. No.
I think the first year we had a beer.
It's not good if I have to buy the fire department beer, I'm guessing.
Thank you, Paul.
Thank you, guys. Thank you, Paul.
Board member comments and action items.
nice article in the paper, Rick.
Well, thank you, John.
Good public outreach. That's part of what I think you got to become as a fire department.
Just in case you don't know, that's in my job description.
Little fluff piece. It's always good.
I take my job description very seriously.
Yes, the other question is, when do we start to see a budget for next year?
For Christ's sake, it's only
Great
July.
job.
Great job.
July, well,
Great job. Bring us
it's gonna be August, then I'm gonna have to approve it at the end of the night in
December
November.
15th.
After I've read it once.
for me.
Yes.
Couple of things. Some of us down here are getting old business, but one thing I wanted to bring up is I'd like to, I'm requesting to move some money from capital acquisition fund. If you look in there, we had $53,000 for Starwood heat to natural gas. We're not going to use that. One thing I forgot to put in capital acquisition, we need a replacement for our pickup trucks, which is utility 13. It's a 2003. Should have been on in here. I have it on the 20-year cap plan I put in here, but I forgot to put it in here for this year. One thing I committed to at Starwood is we will have a quick response vehicle up there. My plan right now is to take that vehicle and use that at Starwood. One reason we did that is they were going to do some budget cuts and only put one bay up at Starwood. And I made a deal with them that, no, we needed 2 bays, but part of it is we need to put a quick response vehicle up there so that the people living there, if it's a medical call or a quick call they need to get out to, they can get there quicker in a pickup truck or an SUV than they can in a fire truck. So
You're going to get the new truck goes out there.
the new truck goes there, but I also need to put a utility vehicle up there.
That's what I mean,
No, I won't put, what my plan would be, that truck, the new truck wouldn't go there. This older truck, if it's only being used there for that, we're using it right now for Wildfire, the 2003, it'll be okay to just park in there because it won't get used very much. So, but it'll be replacing that vehicle or adding to it. That vehicle will be a Starwood, the old truck. Right now, they're going to be using that truck through, any idea when we're done with that truck? Through the summer? Yeah. So until, based on my commitment, once we move in there August 1st, I got to have a second vehicle up there. If I have to, I'll use my vehicle, put my car up there, I'll use my pickup truck for a while. But commitment I made with that, we have a quick response vehicle there. So my request would be reallocate that part of that $53,000 to purchase of a new vehicle, which would, replace the GMC, which is 16 years old.
What are you going to equip that truck with?
That truck will have an AED in it, just some stuff for quick response in that response area. Medical equipment, medical supplies, crash back, that kind of stuff.
What's the 2003 doing before the wildfire season?
It's used as an OCO truck. Yeah.
We have a new OCO truck too, though.
No.
Relative to that.
No.
That's the only OCO truck we have.
We have a battalion vehicle that battalion chief uses.
What now?
We have a battalion vehicle which battalion chiefs use.
But that's not an
That's a
OCO.
command vehicle, no.
Where does it live? Where do they live? How many of these do we have?
We've got a command vehicle that battalion chief drives, Bruce, and one that Ken drives. Ken drives his as both as battalion chief and his fleet facility manager job.
But Bruce drives one all the time?
So, and one thing, good thing too, by the way, I don't know if Dennis, you on those emails, we did get donation from Mr., what's the guy's name?
Latham Stern.
We're getting a $36,000, $36,000 total contract price for PV panels up there. It's gonna cost us a total of $4,600. So a pretty good deal.
Is that building, is it gas now or totally electric?
We get 8K, we're getting 8 kW panels donated. We're paying for 2K, which is $4,000. So we're only using 4,000 of it.
How many meters up there?
And we got 2 meters.
Fully 3 meter up there, including water meter separately. They're not charging us for water. We're not gonna use much. The tenants pay for their own water. And by the way, our 2 tenants up there, are they even here? Here is going to be Jacob and James are the 2 tenants that were selected for up there. So my request is, can we reallocate that money we're not going to use to replace a vehicle?
Yeah, I'd say so.
If you sell the 13.
We can't. We need it up Starwood. That's going to be permanent Starwood.
You're gonna put the 2003 up there and buy another new truck.
Now we're adding another truck.
Exactly right. But
We don't ever seem to be able to get rid of it.
We got rid of one that had a radio in it, we couldn't get it back or something, right?
We got rid of another one that we couldn't use because it was worn out, but Greg Melville has been using it for 8 years at the lodge.
I don't think I want to run that. I don't think I run that code. I want to run that code at a high speed rate though, or high speed of.
No, we used it for Ducky Derby once. It's great.
He spent 3 times as much as it's worth keeping it alive. That's Craig.
No.
He's replaced a lot.
Probably 2. We're probably going to go ahead and sell those 2 4-wheelers we got. I don't think we're going to need those anymore. We're working on, by next month, we'll know how much those may be worth. Sorry, Tom.
What 4-wheelers?
Those 2 little 4-wheelers we got, now that we got the UTV, we probably, I doubt we'll use those anymore.
How many miles ago? 10?
Can't drive them in Picken County.
But we've been called out. We've used this vehicle already for a couple things. So now that people know we have it.
Is it licensed?
Doesn't need a license.
What?
Doesn't need a license.
Dennis, did you hear what he said?
What?
Doesn't need a license.
It's an emergency response vehicle. It doesn't need a license. For
See,
example.
we could keep the 4-wheelers.
Go for a ride.
Yeah, exactly.
We might keep one in Woody Creek. I don't know. We still don't need the one in North 40 right now. So we're looking at that.
There's one at North 40?
One in North 40 and one at Aspen Village.
Sorry.
Great. Thanks.
Do you guys do you want a motion or anything on that for, what do you guys want to do on that? Any
I
action?
saw a
No?
head shake. Yes. I don't know if that counts.
You can't see a head shake on the recording, so I just need some sort of action item that you either move forward with doing that.
So what is the exact request? Is
Yeah, I'll move to reallocate the 53,000 that we
No, he'll be buying a $53,000 truck.
Yeah.
reallocate, well, okay.
So how much?
Let
How
Stoney
much
do
do you
this.
need
He's
to
got
buy
the
a new
hard-
truck?
I don't know yet, but it won't be 53,000.
I know, we make a motion, Rick buys a new pickup.
Don't worry. I've been pretty good with our funds. Come on, give a guy a break, will you? Give a guy a break, will you? I've been pretty good with our funds. Thanks. I got a couple more things. You want to just go through my list? You guys probably saw some of the nice emails about MOU airport. Thankfully, I came to my senses and decided let's push this off till Carl gets back. I talked to him this morning. Maybe we do Carl, you still there? Maybe we do a work session next month. There's been some new things that have happened since the last board meeting that got me sort of back on really trying to push this MOU with the airport. I sent you guys an email yesterday about some of it, but it's something that we're going to have to not ignore for much longer. So I know last month we talked about doing a letter to the county commissioners. You know, that letter did get done. That's what we finished up yesterday, although based on all the stuff going on right now, it's probably best that we all get together in a session and talk about it. I don't really want to go on a record on what that is right now. But,
Want to schedule that?
Carl, when do you get back? Hello? We lost him. Still on.
Hello?
Hey, Carl, I forgot. When do you get back, Carl?
Yeah. I'm back on the 25th.
You want to think about a schedule? We might be able to do a work session and talk about the airport MOU, et cetera.
Yeah, sure. I mean, I'm available anytime after the 25th when I get back. I don't really have much booked at this point.
Okay. So that's a Thursday. You know, we're getting pushed to the end of the month by then. So you guys want to look at that?
29?
Friday the 26th would be great. For me. Lunchtime work session or what?
Whatever you guys want.
It's good for me.
July 26th?
Friday the 26th. Friday the 26th, Carl?
Yeah, that's fine with me.
Between now and then, before that session, I'll get you guys more updated on more. I got a stack of paper about 2 inches thick that I went through over the weekend to sort of re-energize to get this done.
7:30?
11:30?
And I did send you guys a copy of the email exchange I had with one of the members of the ASC Visioning Committee. Did you guys read those by any chance? Anyway, I was asked my opinion, fire department's opinion on from one of the visioning committees about safety, and it was pretty white bread, pretty vanilla what I gave him. But if you read it, my guess is he's going to share that with the whole committee on Thursday, and we'll see what happens after that.
Why did you give it to him white bread if it's not white bread? I thought you were concerned about the safety of
No,
it.
I didn't give him all the details of what my concerns were. I just gave him general concerns that if one of those big planes go down, you know, unless everybody dies, we're gonna be screwed. Can I say that? So, anyway, just read did you read it?
No.
Then read it. You don't know what I'm talking about.
I haven't seen it.
Well, I sent it to you.
Send it to you today.
Oh, you can open that email. I forgot. Basically, it was just general concerns. What would happen if a big plane with 200, 300 people go down? Well, are we prepared for it? I just gave general concerns that we only have how many beds in the hospital? 16 beds in the hospital. If it's the middle of winter, we can't get more people in here. Just general concerns that would concern us, not just with the 737, but also with PA 174. So it's general concerns.
What about our concerns with memo of agreement?
That's why we need to get together and talk about this more fully.
That's on the 26th?
Yes, sir.
26th.
Come by my office sometime. My office, remember where your office used to be? It's right downstairs. Come across the hall. I'll be happy to fill you in. I will, yes. I'll be happy to fill you in more one-on-one, Bobby. About my real concerns. Okay?
You can't say the real concerns.
All right. So that's that. North 40 housing. Did everybody get my email today? I know you didn't.
Yes.
April 15th, noon and 5:30. I'm sorry, July. What am I? April. July 15th at noon here and 5:30 here is a meeting of only fire department personnel and board and everybody, staff, volunteers, to review where the housing committee is to date on housing. Last year we were cooking hot dogs. Oh, wait.
What are the open meetings requirements?
Do we have to notice that?
We're on the same list.
So July 15th, Monday here at noon and 5:30. July 16th, 5:30 to 7:30 at North 40. I need volunteers to help out at North 40 on the 16th for sure, please. We're going to do a little barbecue for the public.
I'm opening a new bank on the 15th, so I probably won't.
Fire truck rides, that kind of stuff. If you won't be here on the 15th, will you make the 16th?
I will make the 16th.
We're important that you're there because you live up there.
I'll be out on North 40. So yeah, we're opening a bank on the 15th, so.
These postcards went out to everybody in our district. We got these today. You haven't seen them? That's what it is. Inviting everybody to that meeting on the 16th. Old business, Aspen Village. Jason Lasser is on board with getting his some new drawings, although I drug my feet in getting him a deposit check, but he's excited about that. Jason, you want to talk about that? Jason?
Hey guys, I'm sorry to interrupt. I got to sign off here. I got to sit down for dinner.
What are you having? Lobster?
Chicken and lettuce salad. Exciting.
Sure. Hey, thanks for getting on, man. We appreciate it.
Yeah, absolutely. Have a good night, you guys. And I'll see you on the 26th. And Rick, I'll get that agreement signed for you tomorrow.
Thanks, sir.
All right, thanks, guys.
A little more old business. August 1st, move-in date. So I was at a meeting with Starwood yesterday. You guys saw the photo in the paper. Really, 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 really nice. Way above expectations of those units up there. Everyone, the tenants are going to live there, are going to be very happy, I think. And then I told you Jay Cabrera was James Gordon are the first two tenants up there. Wildfire Adapted Community Project. You want to talk about what's going on that?
Just an update. We had our wildfire assessment crew out there for 3 weeks now, and probably about 50% of the way through the district, collecting curbside data. So they're moving along real good. We've been working with Big County GIS on the back end, getting our formulas correct and being ready to populate the anchor point web interface. We have a conference call with them this week to make sure that we get the outward-looking part that our citizens will see looking appropriate and user-friendly for them. And all said that we're probably about a month ahead of schedule, so it's coming along real nicely. Secondary to that, I've been getting quite a few calls for folks looking for wildfire risk assessments more in depth than what we're doing at the curbside. When I go out and meet the homeowners and talk to them specifically about the intricacies of their properties and how to make them more fire resistant. So at this point, we're moving along really well. We're ahead of schedule, and we're picking up steam.
I can't even tell you guys how much positive comments we've had on this project so far. Really, really good positive feedback. There was a good radio piece on it yesterday morning, but I hear it on Aspen Public Radio. If you can go online if you want to find it, you can find it. It was Elizabeth Sudbury did a really nice piece on the radio yesterday. We're going to do some more advertising, some more PR stuff out of here pretty quick. We did get our funding last week from Aspen Community Foundation, check to fund the project, to help fund the project. So that money's in the bank. Did I just go in general fund? Is that what I went? We keep track of all the time and that stuff. We're putting into this separately.
You gotta have a separate expense account.
Yeah.
So we're tracking all that right now. We're running under budget. We'll see what happens by the time. I am looking at Stoney, that gentleman you introduced me to, Tobin Jones. Yeah. He's going to be on the computer or on the conference call and web mapping review on Thursday. I probably am going to put him under contract to help us out get it right. He said
he was volunteer.
No, we got to pay.
Did he say that?
Yeah, he sent me a contract. But he will. I think he can be helpful. He's got some good ideas because he's done this, and we'll decide on Thursday after our meeting on Thursday whether or not we're actually going to use him or not. But he's got some ideas he's going to put forth to us on Thursday. So far, he's got some great ideas, so we'll see how that goes. One suggestion he may do, in case any of you guys want to be, can we get? Here's what we're planning to do. We're planning on doing a beta test with some number of people on the mapping, and you might be a good one to do a beta test with Sony because, Wobbs, you're even better. We want it so that even people that know nothing about computers can find their wildfire assessment risk. So
That'd be me.
Seriously, if all the board wants to be on the beta test, can we do that? We'll find out Thursday how we get people started to do beta testing.
Are you keeping Bridget up to date? You keeping Bridget from the city GIS up to date?
We've been working with Alice.
We should update. You're right. We should update.
We're partners with the city, not the county. Just one.
Well, the county. He's been doing stuff in the county with us, not in the city yet.
Okay.
It's data collection.
Yeah, data collection.
So it's Yeah, we'll loop Bridget in quickly. Alex just helped us find the right app to collect the data with.
But maybe you.
I just would involve Bridget.
That's
The
great.
contract we have is with her.
It's great. And we'll definitely do that. I don't know if she would or should be on the call on Thursday. I mean, we could invite her. It's not really something that would, but thanks for reminding me of that. It's a good idea.
And all you have is from her.
And I've given credit, like for instance, on the radio spot I did the other day, I actually gave credit to City of Aspen that we partnered with them in 2014, I think it was, or whatever it was, but they've chosen so far. But I think when we do a more detailed article on it, we'll include City of Aspen, that we're part of the City of Aspen. Give the city some credit, because the county, as you know, remember, said no thank you.
So did the fire district.
No, it didn't.
Until after we had the contract. Then you said yes.
No, it didn't.
Yeah, I'm pretty sure.
Whatever. Either way, we're part of it. That's all I have, I think.
New business?
Oh, well, are you guys going to make the meetings, the review meetings for the North 40? Will you be here on Monday? You guys?
15th?
15th?
I'll be here at noon. I got hospital till noon, till noon, but I'll be here shortly after.
Then as many board members that can make it out to North 40 on the 16th. We'll probably
Monday night?
Tuesday night, 5:30 to 7:30 at North 40.
I'll check.
At the station or where?
Yeah.
Give you a little sample of the
chance for us to
overpark.
tell our taxpayers thank you for the huge vote of confidence.
That's the 16th?
Yes, sir.
What time did you have it in again?
I thought any board members should be cooking hamburgers. What do you guys think?
Yeah.
Sure.
No barbecue chicken, remember?
You guys good with that?
What time is it?
5:30 to 7:30.
I can cook
I got a
hamburgers.
P&Z meeting at 5.
You guys heard it. Board volunteered to cook the this. Would you?
Did you send us invites to those?
Invites?
Well, I can do
Grill,
that.
we're gonna have to get fired up, so we need to be there an hour early or what?
Actually, we have a lot of pulled chicken that we should probably use instead. That's my
Left over
suggestion.
from 4th. That's all I got, folks.
You can make a motion to
What's
adjourn.
going on with training?
Oh, that is something else I want to talk about. I'm looking and planning on the possibility of hiring a new fleet facility manager. Ken's time now is almost very much tied up with Wildfire and all that kind of stuff. So I'm putting together a job description for a new fleet facility manager. Once we get this stuff going in North 40, that job is going to expand quite a bit as well too. So I've got something else put together. Training, we're having a meeting with the officers next week. Got some ideas on that of how we're going to go forward with training division. So everything's.
We have a class going through, right?
We have new members. One of them, would you introduce yourself to these gentlemen again? These are my bosses.
Hello, I've seen a lot of you around. I saw John covered in rain yesterday out there setting up lacrosse camp. So my name's Chris. I'm one of the new recruits.
So we've got 8 people right now going through the program. They're almost through phase 1. There's a review next week with everybody. So yeah, that's what we're doing right now. Any questions?
Motion to adjourn.
Second.
All those in favor?
Aye.
We're done.
Hey, rates are low. Should we be going out and doing this? 10 years, 2% today.
You said that when they were 3%.
No, I said they were going down.